Hello, welcome to another trade recap. So this trade was taken on Monday, April 27th. This was a no news Monday and the price action was a bit slow too, and I'll show you. Now moving on to the charts, the higher time frame bias was obviously bullish. We are at all-time highs and there is no reason for you to take shorts from here. Just target all-time highs after slight displacements and manipulations. So going into the lower time frames, 15 minutes for a better structure, let me show you. So we had our all-time highs at the top. We have this intermediate high in this 1 hour gap. Then we have these purple gaps. These purple gaps are 15-minute gaps and these blue gaps are 1 hour gaps. So we had this liquidity London low in a 15-minute gap. So it was an intermediate low. But for me, this 15-minute was a better option. Why? Because this 15-minute was already mitigated. So if it market had to show a move down, it needs to take this liquidity alongside tapping this gap. Obviously, I would not mind the market to bounce off this gap, but this gap was a better option because it was unmitigated and it just had liquidity just over it, some points over it. And I will show you how this played out so beautifully and how the bounce from this gap was not even worth it. Going into the lower time frame, this was the 9:30 open and look what happened at 9:30. We came down, we swept this low in this already mitigated 15-minute gap, and as I told you, this I was not confident in this. Although it showed some displacement towards the upside, I was not confident. Why? Because at the same time in US 500, where were we? We were super bullish and we were close to taking out this drawn liquidity, which I later on target, and I will talk about that trade too. So I did not take this because ES had already had reached its drawn liquidity. Plus, as I already told you, I wanted the market to go slightly lower into this gap and take out this liquidity. And this is what happened later. Market never actually played out and it went down, took out this liquidity, tapped into this 15-minute, and then it showed displacement up. And if I go on to 1 minute, this is where I entered the trade when it showed displacement up. It closed above this 1 minute gap, changed the state of delivery, the manipulation was there, the displacement was there, the drawn liquidity was there, look at this trend line liquidity. So everything was there. I entered here, I got my fill here, stop loss just here, and I was targeting the central encroachment. But this did not play out good because the market went up and it just kept on generating this trend line liquidity. And eventually at around 11, I got out of this trade because my trading window was over and I didn't want to hold this trade for long. And actually this trade did play out, but I don't care because my trading window was closed. Now move on to the trade that I took after the New York session. Why I took this trade? First reason is the drawn liquidity was so clear. Just look at this. One high, second high, and third. We had 3 equal highs on ES. Plus this time the manipulation was much more cleaner. We had this low, we had this low, and this low just came and took out both of these lows. And then there was a 15-minute bearish gap, which was inverse to the upside. I took a trade here, put my stop loss just here, and I was targeting the equal highs. And just look at this trade, how beautiful it was, and it just gave me 1.2 RR. And for me, this was the trade of the day. Obviously, it was not in the New York session, but as we know, no news Monday and how it plays and how the New York session is slow. So I knew that the market had to deliver to these equal highs today, and I just got my trade and I'm happy about it. Both of these trades were not emotional. They were patiently waited for trades and they were not psychological. So this was it. These were my 2 trades, one break even and one profit. So stay tuned for further updates.